Hey, what's up, guys? Eli here from Skyview Trading. It's Monday morning, April 24th, about 8:18 Pacific time. And I woke up to a nice gift in the market this morning. We're up about 168 bucks on the day. You can see that the reason why we're up so much in all our positions is because IV got crushed in SPX and went from about 32 down to about 10. So because of that, you're going to see a lot of your positions, show a nice gain today because if the SPX IV got crushed, most likely so did all of your positions. So the one I'm looking at here is gold. And we put this strangle on maybe last week already, and we're already seeing a profit of $61 on the spread. So I'm looking to take this position off here and hopefully close it out for a nice $60 profit. So in gold, you can see that IV also got crushed and went from a peak up here at about 43 down to about 6. So I think I remember pointing out in the live trade in gold in the strangle, I think I remember pointing out that we like to have a position on in gold when IVR is over 50, and I believe that's when we put that trade on. So you can see that we had a pretty nice range that gold had to stay in, for the next couple weeks. But when you get a profit as fast as we got it, you want to take that off. So if I go into an account statement, you can see that we opened our gold trade on 4/17. It is April 24th right now. So in a matter of a week, we already have a 50% of max profit on this trade. Looking at it, if we're up $60, a lot of people would look at us and say, why are you closing it out right now? We only held this trade for a week and we hit 50% of max profit. We still have over a month for this trade to fall down or go straight up or anything really. Some news could come out and this stock could or this ETF could soar through the roof and we would lose our profit. When you get this profit this quick, I think I said even in the live trade video opening this trade, that I wouldn't even hold until 50% of max profit. But when you wake up and you're up $36 on the day in just this one, you want to take that off because in 1 week that ups our average daily return pretty high, and that's something that we look at. So let's go ahead and buy this back. When this is a pretty liquid one, so we'll try and get filled here at 50 cents. And see if we get filled. So while this is waiting to fill, it should be any time here. According to the Greeks on this position, you can see that delta is positive. So that means that, we benefit in this position from a move up in gold. So you can see on the chart from today, you can see that we had a nice move up in this position. So, that's a huge benefit from us. But the reason why we're actually seeing the profit as quick as we are is because of this move down in implied volatility. And, that's why we teach people to you want to stay active in many trades all the time, but when you have high implied volatility and you sell premium in high volatility environments, you can commit more of your capital to these trades because this is what happens. This moves down and you see a profit much faster than if you were just waiting for time decay to help your position. So not only do you have time decay on your favor, but you also have implied volatility. And that's why when we see a move up like this, in the 3-month IVR, I think it was maybe like a 70 or 80. I'd have to go back and look. And then IV rank was at a 45 or 42. And look where it is now, 7. So this basically got crushed, and that's why we're able to close this position out with a nice profit. So sometimes this is a good lesson. Sometimes, you put in a buy order, it doesn't get filled right away. People always email us and say that they can't get filled. Here's what I always do. I just do a cancel or replace. I'll uncheck this lock, and you can see that the price actually moved down, so there's no reason it shouldn't have been getting filled at 50. But we'll just try and get filled right at the nat and see if we get filled. And we got filled immediately. So that's all there is to it, guys. This trade, just closed out for a really nice profit in only a week. You could see that we sold at 111, bought back at 51, so we made a $60 profit. You can also see in gold right here, profits and losses, P&L year to date, $60. So, and like I said, that came from a nice move down in implied volatility. And this is predictable. Implied volatility is mean reverting. This is predictable, in high environments, so it's always got to come down. So this is why, you commit in spikes like this, you commit more of your capital to putting on trades, that benefit from the collapse in implied volatility. And when you are selling options, you are taking part in benefiting in that. So that's it for this video, guys. Hope this was helpful, and let me know if you need anything. Thanks.